As I was doing my research for this episode, I came across a really cool fact. Did you know that PDF stands for People Don't Fly? I mean, that's pretty obvious. I don't know why we would need an acronym for that, but I thought that was something really cool. And if you can't tell by that little fun fact there, the company we're going to be talking about today is Adobe. So many people are probably familiar with Adobe, but if you're not, you've probably actually used one of their products at some point if you've used a computer. More than likely, you've probably used either a PDF file before or their Flash player. Now, that's not all they have. Adobe has a wide range of different products that they offer. A lot of them, or all of them, are just for your computer. So these would be things like Photoshop, After Effects, Premiere. Those three are for photography and video editing, but also they have Audition, which is for video recording. They have Adobe Spark for making flyers easily. So they have a lot of different ways of basically helping people be creative when it comes to any kind of, again, videos, photos, flyers, campaigns, anything along those lines. And I know a lot of people actually do use Adobe products. When I research to see how I can make my videos better through video editing, one person that I tend to go to immediately is Peter McKinnon. And Peter McKinnon almost exclusively uses Adobe products for both editing photos as well as videos. And the beautiful thing about Adobe products is that they offer the ability for professionals to really be as elaborate as they want on their editing, but it's also a very simple process for people to learn if you're brand new to this, whether it be making a website, making flyers, videos, recording music, anything like that. So it's really something that a brand new person to that skill set can walk into, and using the same program they can scale their skills. So it's not like you start on one program that's a very beginner and then you move on to your next one, have to learn all those controls. It really helps people build their entire foundation by just using one product. And I currently use iMovie to edit my videos just because it's free and it's on my computer. But actually a long time ago I used to film and edit skate videos, and I use both Adobe Premiere and After Effects. And I love them because again, they were easy for me to use, but allowed for me to be as creative as I want and have as much control over the editing style as I wanted. So why does Adobe seem like an attractive investment to me? Well, the first one is that they only operate off a subscription model. Admittedly, when this first came out, I think it was in 2013, while I wasn't using any of their products, I didn't like the idea from a consumer standpoint because I like owning things. I like ownership. I'm not a fan of leasing out items. So paying monthly for something to me seemed to be really expensive. But then I realized that, these products or services were about, give or take, $500 when they were selling just that one version of it, which is very expensive. And when you have to buy multiple of them, it adds up really quickly. So having this monthly subscription actually makes sense, because if it's $20 to get started, well, it's a lot easier for me to get going with this product than it is for me to pay $500 all at once for something I might not like, use, or enjoy using, or have a preference with another kind of editing software. So at first I didn't like it from a consumer standpoint, but then I actually learned that this is actually a really good idea just to help people with getting started. The other good thing too is, if one of their products, they range from about $10 to $20, but you can also get access to all of them for $52. So if you're somebody that both, for me as an example, so I would need both a movie editing software, a voice recording thing, and something to do the titles. If all of those cost $20, that would be $60. But for $52, I can get access to everything that they offer, which is a really competitive price, and it's kind of an incentive. If you're gonna buy two things and it's costing you $40 a month, well, for $12 more a month, like a Netflix subscription, you can have access to all of Adobe's products. So it's really easy just once you get close to that $52 mark to be like, yeah, I think I'm gonna go ahead and buy this one as well, and just do what you can so you can take advantage of everything that they offer. Also, if you're a business or a student, then you get a discount to those prices as well. And I will admit, I really miss those student discounts. Those were super handy. I got Amazon Prime for free when I was a student. I don't know if they offer that anymore, but I like seeing that they offer an incentive for college students to use them as well as businesses, since it is such a powerful product. And when I changed my view set from a consumer to an investor mindset, the subscription service really made a lot of sense, because as opposed to having somebody buy a product once, hold on to it for 5 years, and then they may or may not come back, you have reoccurring payments on a monthly basis that's going to keep people using this product more and more frequently, because they're always getting the most updated version. Also, again, you're making a monthly revenue from people using these products and services, as opposed to just that one-off situation every 5 years they might come back. So from an income standpoint or from an investor standpoint, I really like the subscription model. Again, as a consumer, it's not necessarily my favorite, but it does make a lot of sense, and I think that there's a way that both the investors and the consumers are going to benefit from that subscription model. The other reason why I think that this is an attractive investment is because they are as close to being a monopoly without being a monopoly that I've ever seen. And let me explain. So a pretty easy argument would be to say that Apple is a competitor of Adobe. After Effects and Premiere really go head to head with either iMovie or Final Cut Pro. GarageBand goes head to head directly with Audition. So they do have a direct line of competition right there. However, Adobe doesn't make computers. They don't make smartphones, they don't make watches, they don't make headphones or anything along those lines. So that's not really a pure play competitor. And you could say the same thing about Microsoft as well. I mean, yes, Microsoft has like spreadsheets, but Adobe doesn't. Microsoft or Windows has, Windows Movie Maker, but it's not the same thing. And so there's not a direct correlation. My dad's in IT, so I asked him, who would you say Adobe's biggest competitor is? And he even said, using Ford and Chevy as an example, there's no pure play competition like that. Now, just to list a few examples though of what other people do use as a comparison would be Google, Facebook, IBM, Oracle, or Salesforce. Again, they all are kind of that software, or they're all that technology company, but none of them really directly go head on to each other like an Apple versus Windows would. The other one that I do feel like could pose a threat would be Canva. That's actually who I use for editing or creating a lot of my thumbnails for these videos, but Canva doesn't have any plans of going public anytime soon, according to their CEO. So not really somebody either that we can really compare, because their numbers aren't available to the public. So this is going to be a little bit different of looking at the numbers than what I typically do, because again, I don't feel that there's anybody I can really accurately compare these numbers to get a good idea. So I have the numbers for them, and they are profitable, so that helps with doing, for me, calculating the intrinsic value of the company itself. But comparing things like PE ratios or earnings per share is a little tough with them. So I'm just leaving it right at Adobe for today. And the first thing we'll take a look at here is they have a high PE ratio, so that 55.7. Again, we don't really know what to compare that to, and I can't say that their high PE ratio is justifiable because they have a lot of cash. So that's always something good to see. If they were experiencing a lot of debt, then that might be a red flag to me. But given that they have a lot of cash, I'm comfortable with a little bit higher of a PE ratio, or as some people say, paying a premium for owning this stock. Their earnings per share also seems a little high, given that they don't pay a dividend. However, they are currently buying back shares of the company, and I'll put a little link up from their earnings call here, or a little picture of that, so you can see exactly the numbers for the share buybacks. Is that something I'm thrilled about? No, but it does explain why they have a higher earnings per share, because when they buy them back, that is going to increase in earnings per share. Again, too, you'll see here that they don't pay a dividend currently, and I don't think they've paid a dividend since like 2005. So I personally would rather see them pay a dividend than buying back shares and it really increasing their stock price. But to each their own. It's still a good company, and there's probably a reason why they're buying back shares and reinvesting that money into the business as opposed to paying back shareholders. One thought process might be that they are still looking to grow, acquire other businesses, or create additional products to add to their line. Their beta 2.9, I like that. With 1 being the market, it's not that far off. It's just a little less volatile, so performs pretty steady when being compared to the market itself. Now, their current ratio, it is low, but it's low because they are buying back shares right now. Again, personally, I would like to see that be maybe above 2, for a company like Adobe that's been around for so long, but I know that the share buyback program is going to influence that current ratio and ultimately have an impact on how much cash they have on hand. They're sitting on about $39 million in cash right now, so they have a lot, but it makes sense for that to be low. If they weren't buying, I think, lots of shares back, this current ratio could easily be a lot higher. And so after taking a look at those numbers, again, I feel comfortable buying it as long as the price is right for it, because there's no direct competition. It's really hard to make, an apples to apples comparison with them. So what I did is I used the free cash flow to the firm to calculate the intrinsic value that I felt comfortable with this stock. And using a weighted average cost of capital of 13.47%, you can see that I was able to calculate a share price of $394.99. So now what I'm going to do, per usual, is I'm going to go to Yahoo Finance. I believe it's trading today around $370. So as long as it's still there, we can go ahead and buy that. But let me pull this up. And I will take a screenshot of this, but it's trading at $371.63 as of this time. So that's a good sign. And you should see that on your screen, the screenshot I just took of it. So let me go ahead and pull up the paper trading and we'll add this to the portfolio. So portfolio today, it's down. Yesterday we were over like $1,000 gain. Looks like Shopify's been taking a hit. That's okay. I'm not going to buy any shares right now. And reason being is because I thought we only owned 2 shares of it, but I guess the system processed an extra 5 somehow. So we already own 7 shares of that, which is fine with me. Truthfully, if it gets back up a little bit, we might consider selling it, but that's besides the point. Let's go ahead and add some Adobe to our account. So we'll go paper trade. We'll go Adobe. I don't know why Macs do that, but it happens. So we're going to place this at market today. I'm only going to go with, maybe let's go with 15 shares for, ooh, that's a lot. Huh. I'm actually going to go ahead and just stick with 10 shares today. Yeah, it's only 3,700 and we usually buy these in 5,000. But it might be a little overpriced right now and I don't want to put it all in at once. So, if the time comes or if I see maybe a better buying opportunity, we'll go ahead and add the additional 5 shares. But Adobe is trading pretty high pretty close to the 52-week high. So maybe if there's another chance for us to buy it, I'll add that and I'll certainly keep you updated with it. But let's go ahead and submit this order and send. All right, so everybody saw that we placed that order. Hopefully it and it's been filled. So we are good to go there. Well, as always, I know this episode was a little bit different today, or I might have seemed a little off. Busy day for me and a little bit hectic, so I do apologize about that, but I really wanted to make sure that I was getting as much info out to you as I can and definitely staying consistent with these Watchlist Wednesdays. If there is anything I missed or if you have any questions for me, please let me know and I'll be happy to help. You could be anywhere in the world, but you're right here with me, and I really appreciate that. So thank you so much for taking the time out of your day to watch this. If you thought it was helpful, go ahead and subscribe or like the video. I'm still really bad at asking for those, so thanks for bearing with me as I do my super awkward asking for you to like and subscribe. But for the time being, leave your questions down below. I've been getting some feedback from people about videos they'd like to see, and I'm beyond appreciative of that. So thank you so much for leaving that. I'll gladly get working on those videos as fast as I can for you, but I will let you go ahead and enjoy the rest of your day.